video, we'll look at the NASDAQ and the Dow. We'll start off with the Dow. Okay, and we'll first go to a weekly chart. We've been looking at these supports. Okay, we were noting this support here as price was coming down into it. So this 35% held on the first correction. Okay, so that says before price is even here, 35% should hold. Okay, and we did hold it, so that says we should go to a new high as long as we hold this low. So at this point, I want to look back at this prior high, right, the way it looked as it broke. Okay, because just like these lows duplicated, the pattern on the break could also duplicate. Okay, so let's go to a daily chart. Okay, we'll back up the chart to that prior break, which is here. Okay, so price is breaking through this high. Okay, so at this high right here, we basically had multiple topping candles. Okay, meaning a lot of dojis up here and we're at a prior resistance, but that's an obvious level, right? Everyone can see this high. Okay, so most traders right here would probably be going short because double top, reversal candles, and we've made a big move up to that point. So it would make sense for the market to correct back down into support, okay, before breaking. But the opposite occurred. We did not correct back down, right? From these reversal candles, the market stayed strong, and then we broke to the upside. Okay, then we had a minor pullback. Okay, then we made this big wave up. Okay, so at this point, looking back at what we just looked at, it's really the same thing as where we are right here to this prior breakout, or that prior high for this breakout. Okay, so if we look at what the candles look like, it looks very similar, right? A lot of dojis up at the prior high, and it looks like an easy spot to go short, right? Just like the prior breakout, we make a move up to the breakout point. It looks obvious that we should come back down. And at this point, the market is still extremely strong. We haven't had what we call a turn pattern to get aggressive on the short side. Okay, so right here, the odds say that we don't pull back. Okay, the odds say that we break and then potentially have a pullback like the prior example, and then we continue higher. Okay, so let's go back and look at that prior example again. We break here. Okay, so it's an obvious breakout. So you can see the candle that broke through, very strong. Okay, so it's basically short squeezing everyone that went short here. Okay, short squeezes up, people get long at the top, then it pulls back on them, and then it continues later, once it shakes all the people out that bought the obvious breakout. The market really makes you pay for doing obvious trades. Okay, eventually, if you went long here, eventually you were correct. Okay, but most traders probably would exit as the price pulls back down, thinking that this is a false breakout. Once everyone exits their long, potentially gets in short, then right here we short squeeze up again, and that's what starts this wave up. Okay, so just looking at this, I would say that, even when we break it down to 60-minute chart, all of these highs are higher highs. Okay, so from the high, the first leg down, 100% corrective. And even the second leg down, if we, let's say we come down, first leg down, 100% corrective. Okay, even this leg is still 100% corrective. All that's doing is pulling into support off of this prior wave. Okay, so we don't ever try to catch this first wave down. Okay, possibly this second wave, but we know it's counter trend, so we would play it more, we wouldn't be as aggressive with it. Okay, we'd play a little bit tighter. So looking at this on a 60-minute, you can measure the waves by just looking back at these prior waves. Okay, 1.270. Okay, so that's going to put 1.270 relevance up at this level. Okay, so it could just continue to to duplicate over and over, okay, and just continue to hit this 1.270, pull back, okay, then 1.270 of that wave, and continue in that symmetry until the bigger time frame kicks in and really drives it up. Okay, and that would look like a candle like this wave that blows through. Okay, or actually let's say this wave where it really gets out of that symmetry resistance and then it takes off. Okay, so there is resistance here, but it's not so much just that double top. It's more the resistance is really here, and that's a new high. Okay, so even from here, if it pulls down, that's counter trend, and the first leg down, okay, can be more violent than the continuation wave down, meaning it comes more out of nowhere. There was a target up here, and then it falls off hard. Okay, kind of like here, falls off hard. Okay, because even if we measure this minor wave back here, okay, that's probably 1.270 relevance here. Okay, so that 1.2 going forward is always going to have relevance. Okay, if this first wave was 1.2. Let's say it was 1.5, then 1.5 would have relevance on this wave. Okay, so let's also look at the NASDAQ. We have an upper target of, for this current leg, 2640 to 2680. So that's still a pretty big move even from where we're at. Okay, so, and when I look at this, yesterday we have this kind of outside reversal candle. Today we're coming right back up to the high of that candle. So that's showing a lot of strength in what some could say an extended market, right? It's extended potentially on the daily, but it's not extended on the weekly or monthly. Okay, so, and the weekly and monthly is really what's in play right now, not a daily chart. Okay, so, and we know that because going back to what we first were looking at, these lows, that 35% were based off of a weekly chart. So from a weekly support, which is here, the weekly is kicking in. Okay, so yeah, the daily and the 60-minute can be extended, but that's just like a 5-minute being extended in a 60-minute wave, right? Or a 3-minute being extended in a 15-minute wave. It's all the same thing. So, you know, if you're super short right here, just something to kind of keep an eye on. We still have higher targets, much higher than where we are now before we get a major pullback. Okay, or at least a pullback like these prior pullbacks. Okay, like the Dow could extend 2,000-3,000 more points before we get a big correction. Okay, because we're basically right at a breakout point. Not saying we won't have a minor pullback, but before we have a major correction, price probably needs to extend much higher.